Have you ever pondered over the health of the UK's economy and what the future might hold? It's a question that's been on the minds of many, especially in light of recent economic events. Let's take a step back and assess the general perception of the UK's economy. Until recently, it's been seen as a powerhouse, a beacon of stability amid global economic uncertainty. But as with all things, change is the only constant. Recently, economist Julian Jessop issued a stark warning about a potential doom loop for the UK's economy. This is a scenario where falling currency and rising interest rates feed into each other in a destructive cycle. It's a chilling prospect, especially when you consider the potential impact on businesses from small startups to large corporations. But Jessop isn't alone in his concerns. The International Monetary Fund and Moody's, two giants in the world of financial analysis, have criticized Britain's new economic strategy. Their concerns revolve around the potential for market overreaction and the subsequent havoc it could wreak on the economy. The government's measures, however, have been in line with what the IMF would expect. Yet the question remains, are these measures enough to stave off a potential doom loop? Or are they merely a band-aid solution to a deeper, more systemic issue? And while all this is happening, the Bank of England promises significant action in response to market havoc. But what form will this action take? And will it be enough to calm the turbulent economic waters? These are not just abstract economic theories or distant possibilities. They are real issues that could have a profound impact on the UK's economic landscape. Is this merely the beginning of a more dramatic downturn, or simply a temporary hiccup in the UK's economic journey? A question we'll delve deeper into as we navigate the complexity of the UK's economy in the following scenes. Stay tuned. Fast forward to August 2022, and the UK economy took an unexpected hit. Imagine this. A bustling economy suddenly shrinks by 0.3%. That's right, the UK economy did just that in August of the same year. It was a surprise, a bit like a pop quiz you didn't study for. And just like that pop quiz, it indicated something important. It hinted at a potential recession. Now, that's a word no one likes to hear, especially when it comes to their country's economy. So, what led to this sudden shrinkage? Well, a number of factors played a part. One of the key contributors was a weakness in manufacturing. This was like the sturdy backbone of the economy suddenly developing a crack. It wasn't just the manufacturing sector that was hit, though. Maintenance work in the North Sea also took a dip, contributing to this economic decline. It was as if the economy was a ship sailing through stormy seas, and the maintenance team decided to take a break. But it wasn't just these factors that led to the shrinkage. There was also the specter of inflation, lurking in the shadows and impacting consumers. This was like a cold wind blowing through the market, chilling the buying power of consumers and slowing down economic activity. These factors combined to create a perfect storm that led to this unexpected shrinkage. But despite this setback, the UK economy showed its resilience. It fought back and found itself back to its pre-pandemic size. As inflation continues to impact consumers, the economy finds itself back to its pre-pandemic size. The International Monetary Fund didn't paint a rosy picture for the future either. As the UK economy navigates a sea of uncertainty, the IMF has projected a rather modest growth for the year 2023. According to their predictions, the UK's GDP is expected to grow by just 0.3%, a number that, under normal circumstances, would be underwhelming. But given the current economic climate, it seems to be a reflection of the challenges that lay ahead. Now, when we talk about these challenges, inflation is a key player. It's like a bitter pill that the UK economy has to swallow. With prices surging, the cost of living is on the rise, and this is impacting consumers and businesses alike. To counter this, the Bank of England has a potential response up its sleeve. It may raise interest rates quickly, a move that can be likened to a double-edged sword. On one hand, it could help keep inflation in check, but on the other hand, it could further slow economic growth, a consequence that the economy can ill afford at this juncture. This is where the role of the central bank becomes critical. The Bank of England isn't just dealing with inflation, it's also grappling with a surge in market interest rates. The institution is trying to slow this surge, but it's a delicate balancing act. Imagine walking a tightrope, with a safety net of economic growth below and a looming threat of skyrocketing interest rates above. It's a precarious situation, and the central bank's actions in the coming months will be crucial in determining the path that the UK economy takes. The central bank is walking a tightrope, trying to slow the surge in market interest rates while ensuring economic growth doesn't come to a standstill. The future might be uncertain, but one thing is clear. The road to economic recovery for the UK is filled with obstacles, and navigating it will require a mix of strategic decisions and a bit of fortune. Despite the cooling economic data, sterling has shown remarkable resilience. This resilience is akin to a ship that refuses to sink, despite the stormy seas of economic uncertainty. Now let's delve into the details of how sterling gained against the dollar and the euro in a week that otherwise painted a mixed picture for the UK economy. In the face of economic challenges, sterling has been a beacon of hope, strengthening against the dollar and the euro. This strength comes not from a robust economy, but from a surprising source, the Omicron variant of COVID-19. Surprisingly, the impact of the variant has been less disruptive than expected. This unexpected turn of events has given sterling a boost, pushing it up by 0.4% against the dollar and 0.6% against the euro. However, it's not all smooth sailing. Economic survey data reveals that the Omicron variant has indeed left its mark. Growth in the construction sector has cooled, and the services sector has experienced a loss of momentum. Yet, in the face of these challenges, sterling has maintained its momentum, defying the odds and keeping its head above water. So what's next for sterling? Investors are watching with bated breath for further tightening of policy by the Bank of England. This tightening could act as a lifeline, pulling sterling up in these turbulent economic waters. However, the outcome is far from certain. With investors watching for further tightening of policy by the Bank of England, sterling's future trajectory remains a point of interest. It's a story of resilience and defiance, a story that continues to unfold against the backdrop of an unpredictable and ever-changing economic landscape. As we navigate this economic roller coaster, it's crucial to keep an eye on the bigger picture. We've embarked on a journey through the highs and lows of the UK's economy, starting with the unexpected shrinkage in August of 2022. An unforeseen dip of 0.3% might seem minor, but in the grand scheme of things, it could be an early signal of a looming recession. Weakness in manufacturing and maintenance work in the North Sea were key contributors to this decline, painting a picture of an economy that is still finding its footing post-pandemic. Then there's the International Monetary Fund's predictions, a sobering perspective on the UK's economic future. The IMF anticipates a mere 0.3% growth in the UK's GDP in 2023, a sluggish pace that could spell trouble for business owners and consumers alike. Responding to these unsettling forecasts, the Bank of England has promised decisive action. With an eye on surging inflation, the bank may raise interest rates, a move that could slow economic growth even further. It's a delicate balance as the bank also seeks to stem the tide of market interest rates. Yet, amidst these economic headwinds, sterling remains resilient. Despite cooling economic data, the pound has maintained its momentum, gaining against the dollar and euro. This resilience serves as a reminder that even in the face of adversity, there are pockets of strength to be found. While the future remains uncertain, one thing is clear: the UK's economy is on a journey, and we're all along for the ride.